If I realize what's holding me back and it actually is a priority, then figure out how to get past it, right? If it's not a priority, just be honest with yourself. Say, hey, it's not a priority. But quit talking about it. Quit acting like it is, right? Quit talking about building a portfolio. If you're gonna talk about it, do it. All right, guys, welcome to another episode of the Vacation Rental Revolution podcast and our Whisky Wednesday segments. I'm here with my main man, Dave Sivulich, and we're going to get after it again today, buddy.
Let's do it.
We got some fun things to talk about, trending topics, some questions that you guys send in. And so if you guys are watching this or listening, wherever you are, if you have questions, send them in to us. We'd love to get your questions on these shows answered, because if you have a question, somebody else will as well. So DM us or post it in the comments, and we'll grab those and answer it on an upcoming episode of Whisky Wednesdays. And so, Dave, we're going to dive in. I just wanted to make note of.
You look good.
Hey, I was on a live webinar, just so you guys are I'm trying to change it up a little. I didn't wear my vest. This guy says, I do live webinars and live workshop trainings, and I get a message from a guy right in the middle of it, like 5 minutes in. He said, "This is really disappointing. I'm out of here." And I got the email, and he said, "You said this was live. It's the same one as last week, and you're wearing the same thing. I know it's a recording." And I was like, well, I wear the same hat, the same vest, and the same jeans pretty much every day, or a version of.
Yeah, exactly,
right?
A version of. Cowboys
of
look the same all the time.
Yeah.
You know what I mean?
Yeah, and so I was like, well, and so I told him, and I said, hey, I apologize. It was actually live, and they're all different, but I do wear pretty much the same getup.
You wear the same hat sometimes.
Yeah.
And it's the same boots.
Yeah, and we were these guys behind the cameras were making fun of us earlier. They said, "Hey, when did you start wearing that cowboy hat?" I was talking about Beth Dutton on Yellowstone. By far my favorite character of all time, by the way, if anybody hasn't seen that. She is my favorite character of any show I've ever seen. I love her monologues, and they said, that's why you started wearing the cowboy hats. They might be right. That might be when I started really diving into the old the cowboy hat stuff.
I can attest that you don't wear the same outfit every day.
I do. I have three hats that I rotate. I have different boots.
Yeah.
I do have different pants and shirts, but I wear the same vests. I have three vests that I rotate.
The same style. And the webinars are live. I can promise you that, because I'm in the other room sitting there, online with him. So
this is live. If you're listening, we're actually recording live. I took the vest off just for you, my friend. So hopefully you're watching on YouTube.
Good.
All right.
Well, let's get started. So happy New Year to you.
Hey, happy New Year to you.
Yeah, I'm excited.
The new year.
I'm excited for
Kicking
the new
things
year.
Off. All right, let's do it.
So let's stay with that topic. So what's your favorite New Year's drink? I mean, I don't know. I guess maybe that's a dumb question.
My favorite drink, as always, is going to be a Scotch whiskey. My favorite drink on New Year's, I always crack a bottle of Johnny Walker Gold. Is what I bring the New Year's.
So it's a little different than maybe just the
regular Jack that I normally drink. But yeah,
it's kind of like me. I mean, I'm a Coke Zero kind of guy, but I'll have cherry Coke on New Year's. So,
nice. I like it. Bring in the new year with a little cherry Coke.
Yeah, get a little cherry Coke
about like
or something different. Throw a couple more limes in it or something.
You put a new pair of Lululemons on and grab a cherry Coke.
Exactly. Yeah. New Viore shirt. And I got to get a couple more of these.
I like it.
Anyway, all right, so let's dive into a trending topic, or something that has come up a little bit recently. And I got this email. I got an email on this, but I also was talking to somebody, and they had asked this same question. Is a lot of people are holding on buying right now. They're like, I'm just going to kind of hold and wait. That's kind of an interesting thing. And I answered, hey, I am always in acquisition mode. We are always buying. So what is your thoughts to that? What would you tell people? What's your advice on that?
Yeah, we're always looking for good deals, right? There are times and seasons when deals and opportunities are more prevalent than others. After learning this for a long time, is usually when everybody's in hold and wait and see mode, that's when I'm super aggressive.
Right.
So right now, you're right. There's a lot of people waiting. There's a lot of people sitting on the sidelines. That's my cue as an investor that the best opportunities are available right now. You have to realize when you're investing in real estate and you're buying stuff, it's a long-term investment, right? And so the best time to buy was always yesterday, right? Yeah. So it doesn't matter what the environment is. The best time to buy was yesterday, because we need that time to get those assets to mature, right? To really see the full value and realize the full potential of an asset. And so yesterday was the best time. The next best time is today. So we're always in acquisition mode. Right. There are always external things going on in our environment. High interest rates, elections, wars, different things happening, like when the market interest rates were low and you were competing with 1 million people and everything
Prices
was selling.
High.
Everything was selling for $50,000 and $100,000 over ask price. There's always external factors that make it seem like today is not the right time to buy. You get a lot of inexperienced people, and that's okay. Most of us are inexperienced, and you have to be inexperienced before you start something.
Right.
And so I'm not trying to throw shade on the inexperience, but realize that it is inexperience when you're not able to recognize opportunities in different markets. When everybody's competing against everything and things are getting bid up so far, those are the times when everybody's in the market buying. When we are always looking for good opportunities, but we're not buying as many properties typically during that period.
Yeah.
We're like right now, where rates are high, prices are high, inventory is really low, but there's a lot of people sitting on the sidelines. We're not competing as much. We're able to make some pretty good deals right now.
Right.
I mean, you'd be shocked at some of the owner finance deals we're able to put together right now, and some of the things that we're seeing. But they don't look like great deals on the surface. We know how to peel back some layers of the onion and look at that. But there's always going to be external factors, and ask yourself, why are you pointing to that as a challenge, right? Interest rates, for example. Go back in history. We do this all the time on our workshops, and look at interest rates. They're all over the board. They're up, they're down, they're sideways, they're always changing, right? And go look at the asset during that same period of time, whatever asset class you're in, whether it's stocks, whether it's real estate, whatever it is, businesses, those assets, the quality assets are going up over time, year over year over year. It doesn't matter what that, and so it's interesting to me a lot of times where people place their focus on, and the reasons why they sit on the sidelines. To me, a lot of times those are just factors that you have to factor into a deal. That's a line item on my underwriting, right? An interest rate that I'm paying is a line item and an expense line item, right? It's part of my debt service that I have to pay. Doesn't make the deal, like the time of the deal, good or bad, right? It's just irrelevant. It's just a data point on my expense and on my underwriting. If I can underwrite deals at high interest rates, it's a non-factor, right? If I have to have a really good interest rate to make that deal work, it's not the deal that I'm going to buy right now. I'm going to look for another deal to buy right now. It's always interesting to hear, I'm in wait and see mode, or I'm a holding. And holding for what? What are you holding for, right? If you're holding because you don't know if this is the right asset class, great. Go get educated. Figure out if it's the right asset class, right? If you're holding because of something like an interest rate, maybe you should get a little more educated as well and realize that that's just an expense line item.
Right.
High interest rates, high prices are going to make some deals not work, right?
Well, like you said, the best time to buy was yesterday. The next best time to buy is today. And I feel like a lot of times that's an excuse for people to kind of sit on the sideline is, hey, I'm just going to kind of wait. I don't think there's ever a perfect time. There's always something. There's always something that's going to come up that's going to preclude you from moving forward with this. And we talk to people all the time about, hey, let's get in the game, get a process, get a blueprint, and let us show you and help you how to do it. And if you know and understand the knowledge and the education behind it, you can make a decision. So
what's more important is to say, okay, how committed am I to the outcome?
Right.
Am I committed to building a portfolio? Is that a priority to have X amount of properties, or whatever it is? Whatever you're waiting on, is it actually a priority for you? Is the outcome actually something that's important to you?
Right.
And if the answer is no, then sit and wait and don't do it. Sit and talk about it. If the answer is yes, that's a priority, well, then figure out how to take action. Figure out how to make it a priority and move past some of those obstacles that you are placing in your way, because there's always going to be those outside factors, interest rates, the market, elections, a war, whatever it is. There's always going to be those people in your life that you're going to place blame on. Spouses, partners, friends, family, they don't like what I'm doing, right? So I want to place the blame to them. But the real reason is, a lot of times, is ourselves, right? Our own doubts, fears, insecurities about actually moving forward and taking a chance on something. And so you have to look and say, okay, what's holding me back between those three things? Outside influences, other people, or my own doubts, fears, and insecurities. If I realize what's holding me back and it actually is a priority, then figure out how to get past it, right? If it's not a priority, just be honest with yourself. Say, hey, it's not a priority. But quit talking about it. Quit acting like it is, right? Quit talking about building a portfolio. If you're going to talk about it, do it.
Right. Educate yourself. Understand it. Get to a point where you really can make a good decision, then dive in. Get off the sidelines. So, all right, let's get to a couple questions. Can you explain some of the financing options for short-term rentals?
There's two options that really are the biggest for us.
Did you do this?
I did three.
There's two options.
I said three.
There's two options.
Sorry. There's two options, not three options. Okay, so there's two options. Traditional financing.
Okay.
Right? Starting off, we're able to get really good rates and terms on second home financing, right? And we're able to rent these properties out as long as we're going to use them. with some personal use, and we're going to have use of them and not give up control, we can use those types of loans to build a portfolio. Eventually, though, those are full doc loans. So you have to be very lendable. You have to have income, disposable income. You have to have good credit, all those different things, right? So, but they're the lowest downs, right? They're the 10% down financing. They're going to be similar interest rates to primary residence. I mean, it's going to be the best terms. Most investors are going to start with that. But what happens is, as you scale and build your portfolio, you're going to go into more investment type product loans. Investment product loans are going to be a little higher interest rates, a little bit higher down payment. You're going to be putting 20-25% down. You're going to be probably about a point higher on an interest rate. The nice thing about these types of loans are called DSCR loans. It stands for debt service coverage ratio loans. The asset itself qualifies for the loan. You don't have to have personal income to qualify for these loans. The asset actually qualifies, and it will qualify either on past performance or predicted future performance, which is really good. They'll actually underwrite it and say, hey, listen, we know this market and this, and the way that most of the banks underwrite is they've got software tools that they use, and if it underwrites for us as an investor, it's going to underwrite for the bank, let's say.
What's the negative downsides of DSCR?
So they usually have prepayment penalties, right? So one, the terms are a downside. You're going to have more down payment and higher rate, so it's going to cost you more to get into them. Most of them have prepayment penalties, usually 3 to 5 year prepayment penalties. So if you're going to use those types of loans, especially in today's day and age at a high interest rate, your plan of refinancing is going to cost you, right?
So as long as you don't refinance in the next 5 years or so,
sell it,
whatever the term is, or sell it, then you don't
really
have to worry about that side of it.
Yeah, absolutely.
But if you're looking to do something within that term, then it's going to cost you.
Yeah. So those are some of the downsides. So you have to have more of a long-term approach. Make sure that it underwrote well for you. Now, I use those loans all the time. I use traditional loans all the time. Sometimes we pay cash for properties. And so you have to navigate the different things based on your property goals and your situation at the time. But those are really two good options for investors, depending on how lendable you are and how much cash you have available.
Yeah, right? Good. All right, good answer. Good information.
Good.
Last, not necessarily a question. This is more as we start the new year. Are you a goal guy? Do you like setting goals at the first of the year for the next year, or how do you look at it? Because a lot of people kind of handle goals differently. Some say, let's do it all year. Let's do it now. What's your strategy?
Yeah, I'm kind of an anti New Year's resolution guy.
Okay.
Like I think that New Year's resolutions, I think it's good for people to think about the future, right? I'm always writing like what our far future looks like. I have exactly like what I want to do in 10 years, 5 years, 1 year. It's always there. I don't necessarily sit down at the first of the year and do it.
Right.
Like I've always got that there. And then once I check that box off, then I adjust. And I start to move, it's a moving target for me, if you will. And it's throughout the year. We're looking at that stuff all the time. Like I look at my stuff every single day, right? And so I'm looking at it every single morning. I think about what things would look like in 5-10 years, right? And it's interesting when you have that 1 year, 5 year, 10 year type of a plan, which is what I do. I tend to find that I hit that 1 year pretty often, right? And so it's always a moving target, and it's not always like January 1st to December 31st, right? It's not a calendar year necessarily, because it seems like it's always moving. Sometimes I'll adjust it in June, sometimes I adjust it in January, depending on when we start to reach it, right? Sometimes it takes me more than a year. And so sometimes we have big goals that we're like, man, that's taken me 18 months. And so we don't start moving that target. The reason I'm anti New Year's resolution is it really, really bothers me when we give ourselves this like, okay, I'm going to wait. Again, it's kind of that wait and see mode, right? Like we see people a lot throughout the holidays. Like I'm going to wait until the first of the year to start something.
Right.
That bugs me. I don't like that. I never wanted to be that person.
Why not be better today?
Why not do it today?
Like
exactly.
14 days from now.
Right. That's why I don't like New Year's resolutions. Not for the fact that people set goals.
Right.
It's that they wait to do anything because they're like, I'm going to wait to get through the holidays. Really? Why? What are you waiting for? You see gyms, you see like our business. We will get a flood of people calling us to help them in coaching at the first of the year because they were waiting to go.
They're going to start the new year off and go after it,
And I just like those people that came to us December 15th instead of the person, I just feel like it's a different mindset because you're like, okay, I'm going to do something now when I'm thinking about it, not give myself a reason to wait. Because usually if you give yourself a reason to wait, you also give yourself a reason to quit, which is why gyms get really crowded in January and then by March they're empty. And I don't know, that's just always kind of been my mindset.
Good. No,
what about you?
Good.
You do that?
I'm kind of I don't mind mentally thinking about how I want to be better, and I think it's just ingrained in us, like at the first of the year, to think, okay, what do I want next year to look like? So I think that's fine. But I'm kind of the same with you. I have in the past, but I don't sit down and just draw it down. Okay, this is what I want to do. I'm not against it, and I have done it before. Okay, I want to be committed to doing this all the time and continue to set goals and try to be better throughout all the time.
That's kind of how I feel.
Yeah.
Like if I have a new idea or something I want to try, I'm going to do it today. I'm not going to say, well, I'm going to wait till the first of the year. I'm going to wait till the first quarter or wait till the end of the second quarter, whatever. I don't like necessarily have a start or end date on something. I say, hey, if I want to try something or do something or have a goal for something, if it comes into my head today, I'm going to start it today.
Just start doing it, yeah. Good.
So,
all right, buddy. Well,
okay,
I like it. That's it. Yeah, good episode.
So let's start the new year off with some big goals
exactly.
and big dreams.
I'm going to start jotting that after this. We're going to start jotting some things down.
Yeah, all right. Sounds good. All right, guys, we're going to wrap up this episode. We appreciate you joining us. We know how valuable your time is. And at the end of every episode, I always ask you two things. The first one is, if you like this, please share it and give us a review. If you have more than 30 seconds, write us a review. Those things help us. If you share it with people that you know, help us spread the message. And the final thing is to go pick that one thing you can do today, start building that life you don't want to take a vacation from. Cheers, my friends.
Cheers, buddy.